Okay, pay attention now. So to calculate the capital gains, we need cost of acquisition also, and also the cost of improvement. So now pay attention. What is the meaning of cost of improvement and what is the meaning of cost of acquisition? Okay, no? So before we discuss about cost of improvement, we are going to discuss about cost of acquisition. Cost of acquisition. Now what is the cost of acquisition? Come on, tell me. You are a transferor, no? You have transferred your capital asset. So now to calculate the capital gains, you have taken full value of consideration minus transfer expense, you are having net consideration. So out of that net consideration, reduce the cost of acquisition of your asset, which you are transferring. So what is the cost of acquisition, which you are going to reduce? So cost of acquisition is nothing but PP plus PRE, your actual cost. The cost at which you acquired the asset, yes or no, is nothing but your cost of acquisition. So cost of acquisition means actual cost. It means actual cost. Actual cost means PP plus PRE. PP plus, what is PP? Purchase price. PRE means purchase related expense. So at the time of purchase, whatever expenses you incurred for purchasing that asset, yes or no? All those purchase related expenses will also be added to the cost of your asset, yes or no? Because of that, your cost of asset will increase. So it is not just the purchase price which you have paid at the time of purchase. At the time of purchase, some purchase related expenses also happened. So you are transferring the asset right now. Now go in the flashback. See that when you acquired that asset, at the time when you acquired that asset, at what cost you had acquired it? What was your actual cost of that asset? That is nothing but the cost of acquisition. So for all the assets, you are supposed to take what? Actual cost as the cost of acquisition. For all the assets, you are going to take what? Actual cost as cost of acquisition. Will you remember this? Sure, sir. Now pay attention. Now there are certain assets. There are certain assets for which cost is defined under section 55(2). If this is the asset, you will take this cost. If this is the asset, you will take this cost. So there are different types of assets. The name of those assets are given in section 55(2). For those assets, the cost you are going to take what we are defining. So there is a defined cost of those assets. Other than that, you cannot take any other cost. So if this is the asset which you are transferring, the cost we are defining. Understanding? So for all the assets, it is actual cost. But for certain assets, the cost is already defined. The cost is already defined. Okay, no? So cost is defined under section 55(2)(a) for intangible assets. Intangible assets. Whether these assets are self-generated or they are acquired. Then 55(2)(AA) will come. Cost of acquisition of financial assets. Financial assets means shares. Then after shares, on the basis of these shares, you are going to get bonus shares. Then you are going to get right. And if you will exercise this right, then you will get right shares. Or you can renounce this right also in the favor of someone. That is known as relinquishment. So when you will renounce that right, the capital gain will be calculated on renouncement of right also. What will be the cost of that right in that case? Yes or no? Because you have to calculate the capital gain on renouncement of right. Right is what? Right is an asset. Because of that, you are going to get right shares at cheap cost. So what will be the cost of that right? which you are renouncing, and on renouncement, you are going to calculate the capital gain. Yes or no? Then, based on the exercise of this right, you are going to get right shares. So what will be the cost of acquisition of right shares? Okay. Then after that, there will be 55 subsection 2 clause AC. Clause AC talks about three assets. First one, listed equity shares. Then second one, units of equity oriented mutual fund. Then third one, units of business trust, which you transfer through recognized stock exchange, on or after 1st April 2018 as long-term capital asset, and on transfer STT is also paid. And if it was listed equity shares, so in the case of listed equity shares, at the time of acquisition also the STT was paid. So if any of these three assets are transferred on or after 1st April 2018 on a recognized stock exchange, and at the time of transfer through recognized stock exchange, you are paying what? STT also at that time. But in the case of listed equity shares, when you acquired them, at that time, you had paid STT at the time of acquisition also. Now, whenever you will transfer these assets as your long-term capital asset, your long-term capital gain will be calculated under section 112A. So, to calculate this long-term capital gain of these assets, yes or no, what will be the cost of acquisition of these assets? That is given in 55(2) AC. So we have defined that in such case, whenever you are going to calculate the long-term gain under section 112A, for these assets, what cost you are supposed to take? That we have defined. That cost only you are supposed to take. Understanding or not? And then there is one section, 55 subsection 2 clause B. And this is a very beautiful section which gives you an option. To take what? Fair market value as on 1st April 2001 as your cost of acquisition. So if you want to take this fair market value as on 1st April 2001 as your cost of acquisition, then you can take this fair market value also as your cost of acquisition. So ignore your actual cost and take this fair market value as your cost. You can take this fair market value also as a cost. But this option is available for all assets. What did I say? All assets. Other than 55(2)A, meaning this is not available in the case of these intangible assets. Other than intangible asset, for all assets you are going to get this benefit, that you can take the fair market value as on 1st April 2001 as cost of the asset. So if you want to take actual cost, you can take actual cost. If you want to take this defined cost or this defined cost, then you can take this defined cost. Whatever cost which is defined or actual cost, you want to take this cost, take this cost. Or we are giving you the option also to take what? Fair market value as on 1st April 2001 as your cost of acquisition. But that option will be available. Only if capital asset was acquired by the assessee prior to 1st April 2001. If the asset is acquired on or after 1st April 2001, then take actual cost or defined cost. That's it. No option is available. But if the asset was acquired prior to 1st April 2001, then take actual cost or defined cost, as the case may be, or you have the option to take the fair market value also. Understanding? So first of all, I will not discuss anything about the defined cost. Okay, no? Costs are defined for intangible assets. Cost is defined for financial assets. Cost is defined for capital asset, which is listed equity shares, etc. Whose capital gain you are calculating under section 112A. Long-term gain you are calculating under section 112A. The cost of these assets also defined. But where the cost is not defined for any asset, what cost you are going to take? Actual cost. So usually for all assets you are supposed to take what? Actual cost. But if you'll see any of these assets, then the cost which we have defined, that cost only you are supposed to take as your cost of acquisition. Will you remember this? So tell me, first of all, if I say, if any capital asset is acquired. Now if that capital asset is acquired, it can be acquired prior to 1st April 2001 also, and it can be acquired on or after 1st April 2001 also. Now if any capital asset is acquired on or after 1st April 2001, then cost of acquisition will be what? The actual cost. In that case, you are not going to get that option to take the fair market value, because that option is available only if the asset was acquired prior to 1st April 2001. So if any capital asset is acquired by you prior to 1st April 2001, so here you get that option under section 55 to B, 55 subsection 2B. Yes or no? You can take the actual cost also as the cost of acquisition, and then we are giving you an option that you can take the fair market value as on 1st April 2001 as your cost of acquisition. Which cost you will take? Will you take actual cost or you will take fair market value? Whichever is higher. And usually the fair market value is higher, because over a period of years, the assets value will keep on increasing. So definitely the fair market value as on 1st April 2001 will be higher as compared to the actual cost. Understanding or not? So the actual cost you have incurred in 1985-86 because you acquired the asset in 85-86. At what cost you had acquired? 2 lakh rupees. Now the fair market value of that same asset as on 1st April 2001 was 5 lakh rupees. So when did you acquire? 85-86, meaning prior to 1st April 2001. At what cost you acquired? 2 lakhs. Actual cost was 2 lakh. We are giving you an option that if you want, you can take the fair market value as on 1st April 2001 also as the cost of acquisition. So what was that fair market value? 5 lakhs. So you can take 2 lakh also as cost. You can take 5 lakhs also as cost. What would you like to take? Actual cost or fair market value, whichever is higher. Definitely the higher cost you would like to reduce so that your capital gain comes down, so that your tax liability reduces. Getting my point? But this option is available only in the case of those assets which are acquired prior to 1st April 2001. Is this option available for all assets? Absolutely all assets. This option can be taken, but not for intangible assets given in 55(2)(a). For those assets, this option is not available. Yes or no? So if the capital asset is acquired prior to 1st April 2001, then what will be the cost of acquisition? It will be A, actual cost, or it will be B, the fair market value as on 1st April 2001. This or this, whichever is higher. You can take this cost. But wait, this is in the case of any capital asset other than immobile property. We are not talking about intangibles. Intangibles, we are not going to do all these things. Yes or no? We are going to do this thing for all assets. But in all assets also, immobile property, you are not going to do this. Then what are you going to do? Let's take an example that, for example, if capital asset is immobile property, and which was acquired. When it was acquired, sir? Can it be acquired prior to 1st April 2001? Yes, sir. Can it be acquired On or after 1st April 2001? Yes, sir. So if you are transferring an immobile property right now, but that immobile property you acquired, when did you acquire? On or after 1st April 2001? Transferor. Hello, my dear SSE. Are you alive? Huh? So SSE, tell me now. You are transferring one asset no right now? That asset is immobile property, no? When did you acquire that immobile property? Oh, 2005-6. Meaning on or after 1st April 2001. What will be the cost of acquisition? Actual cost. What will be the cost of acquisition? Actual cash. And SSE, what are you transferring right now? Immovable property. Oh. When did you acquire this immobile property? Oh, 96-97. Meaning prior to 1st April 2001. So will you get this option to take the fair market value? I told you that this option is available for all assets other than 55(2)(a). So will it be applicable for immobile property? Yes, even for immobile property, you can do the same thing, sir. Copy, paste. So copy, paste. So for immobile property also, we are giving you an option. Option to take what? Fair market value. So this option is given for all the assets, so it will be given for immobile property also. Then why are you writing separately, sir? Wait, now this fair market value which you are going to take now as on 1st April 2001, there is a restriction that in the case of immobile property, which was purchased prior to 1st April 2001, you can take the fair market value as on 1st April 2001 as cost. But that fair market value cannot be more than stamp duty value of that asset. Which value? Stamp duty value of that immobile property as on 1st April 2001, if available. So always you are not going to take the fair market value. Fair market value option available. We are giving for immobile property also. But remember, for immobile property, the fair market value can be taken as cost of acquisition. But this fair market value cannot be more than the stamp duty value of that property as on 1st April 2001, if available. If available. If as on that day, you know the stamp duty value, and the stamp duty value was 13 lakhs. How much? And the fair market value was 10 lakhs. So is your fair market value more than stamp duty value? No. So you can take the fair market value. No problem in that. Understanding? So in that case, take the fair market value here, because it is not more than stamp duty value as on that date. But what if that day the fair market value was 10 lakh and the stamp duty value was only 9 lakhs? So your fair market value which you are going to take here cannot be more than 9 lakh. Entire 10 lakh fair market value we are not going to allow you. Your fair market value will be restricted only to the extent of stamp duty value available as on that date. In the case of immobile property, stamp duty value is available as on that date. So you have to restrict your fair market value to the extent of stamp duty value. So what are you going to take here? Fair market value or stamp duty value? Whichever is lower. Fair market value or stamp duty value, whichever is lower. So if fair market value is 10 lakh, stamp duty value is 13 lakh. 10 lakhs. B will be 10 lakhs. Or actual cost, whichever is higher. Understanding? Or what if the fair market value is 10 lakh and stamp duty value is only 9 lakh? So fair market value 10 lakh cannot be more than stamp duty value. So only 9 lakh rupees of fair market value can be taken. Cannot be more than stamp duty value. Understanding? So B will be 9 lakh. 9 lakh or actual cost, whichever is higher. So here no, simple thing, in B no, there will be one more thing. What? Or what? Stamp duty value as on 1st April 2001, if available. So fair market value or stamp duty value, whichever is lower, that lower amount will become B, and your actual cost, whichever is whichever is higher can be taken as your cost of acquisition. So sir, for all assets, including immobile property, for all assets, including if acquired on or after 1st April 2001, what will be the cost? Actual cost. That option to take fair market value is not available. Whatever is the actual cost, take that actual cost as the cost of acquisition. For immobile properties also. For any asset, jewelry, shares, this, that, whatever asset is there, no, take actual cost only as cost of acquisition. What is actual cost? PP plus PRA, purchase price of that asset, plus whatever expenses you have incurred at the time of purchase or acquisition of that asset. Those expenses will also be added to determine your actual cost, and that actual cost can be treated as your cost of acquisition. Understanding? Now what if any asset, including immobile property, was acquired prior to 1st April 2001? Will you get the option to take the fair market value as on 1st April 2001? That option is given under section 55, subsection 2, clause B. Yes or no? So what cost you will take? Actual cost or fair market value as on 1st April 2001, whichever is higher. But remember, in the case of immobile properties, in the case of, you can take the fair market value as on 1st April 2001, but that fair market value cannot be more than stamp duty value of that immobile property as on 1st April 2001 if it is available. Understood? Done, sir? Now for all assets, the cost is this only. But for few assets, no, we are telling you that you are supposed to take this cost only. So now first we are going to learn that what they are telling about intangible assets, what they are telling about financial assets, then what they are telling about, the listed equity shares whose long-term gain you are going to calculate under section 112A. Understanding or not? Tell me. And I am going to make questions on this. I am telling you in the class itself for you. The questions I will frame, the questions you are going to write, and those questions you are going to solve in front of me only. So you have to be very careful. Okay, no? Now pay attention, sir. If cost of acquisition is there, no sir? Sir, what is cost of acquisition? It is PP plus PRA. Normally, actual cost is cost of acquisition. Okay. Option you are getting under 55(2)(b. What option? If the capital asset was acquired prior to 1st April 2001, cost of acquisition will be actual cost or fair market value as on 1st April 2001, whichever is higher for capital asset other than immobile property. But what if the capital asset is immobile property? Still you can take this option. Actual cost or fair market value, whichever is higher. But your fair market value cannot be more than stamp duty value. That's it. Okay. But if capital asset, meaning any capital asset including immobile property, was acquired on or after, then option under section 55(2)(b not available. And what will be the cost of acquisition? Actual cost. This entire thing I have discussed so far. Okay. Next one. Now let's come to specific assets now. Right now, what are you transferring, assessee? Assessee, you are the transferor, no? Which assets you are transferring? These intangible assets you are transferring right now. Asset or property of any kind, whether tangible or intangible, movable or immovable, fixed or circulating, whether used for business or not, those assets are treated as your capital asset. So any type of asset, whether tangible or intangible, is your capital asset. So right now, a capital asset you are transferring. And what is that capital asset? Intangible asset. Now if these intangible assets you are transferring, will you calculate the capital gains? Yes. So what cost of acquisition you are going to take? What cost of acquisition you are going to take? Don't think. Don't apply your mind. Already defined. Whatever is written here, take that amount as cost. That's it. So if these assets are there, first of all, you are supposed to see the names. What are the names of these assets? Okay, now tell me. First asset is goodwill. Goodwill. Goodwill of any business or profession. So for your business, for your profession, you have acquired a goodwill. Oh wow, understood. Good. Trademark or brand name of any business or profession. And point number 3, can you see? This point number 3 was not there 2 years back. 2 years back, only 2 assets. Goodwill of any business or profession, trademark or brand name of any business or profession. This point number 3 was not there only 2 years back. 2 years back, amendment came. Goodwill, trademark, brand name or any other intangible asset. This word was also introduced. Goodwill, for goodwill already 55(2)(a) was applicable. For brand name and trademark also already 55(2)(a) was applicable, but it was not applicable for other intangible assets. So 2 years back they said if it is applicable for goodwill, if it is applicable for what? Trademark or brand name, why not to make it applicable for other intangible assets also? So all the other intangible assets are also covered now. Yes or no? And other than this, they were talking about right to manufacture or produce or process any article thing. Right to manufacture. Right to manufacture. Then you have a right to carry on any business. You have this right, or you have this right, or you have tenancy right, or you have stage carriage permits, or you have loomers, or any other right. 2 years back, they are saying that if we are talking about all the rights in 55(2)(a), then why other rights should also remain? Consider all other rights also under this section only. So this thing got introduced, and this thing got introduced 2 years back. And because of that, now this section talks about all intangibles. 2 years back, this section was talking only about 7 intangible assets. 7 specified intangible assets. So this section we used to check only for 7 specified intangibles. Those were goodwill, trademark or brand name. Then right to manufacture, right to carry on any business or profession, tenancy right, stage carriage permit and loomers. Only these 7 assets were covered 2 years back. Now 2 years back when they came with an amendment, so in this section they have introduced all other intangible assets, all other rights. So now this section does not talk only about specified intangibles. Now this section talks about all intangible assets, all the rights. Understanding? Which assets? All intangible assets, all rights. So now you have to remember these names. First name, goodwill. Goodwill of any business, any profession. Second one, trademark or brand name of any business or profession. What do you call this? Bisleri, no? Bisleri, no? This is mineral water. But every mineral water is known by the brand name of Bisleri. That is the power of that brand. You get your notes, the notes which I send. What do you do with those notes? You take the Xerox. You take the printouts. Yes. Xerox is a printing machine. But Xerox is a brand which manufactures printing machine. Such a great brand, no? That every printing machine and every printout is now known as what? Xerox. Morning la, we wake up, okay, no? First thing we brush our teeth. With what? Colgate. No toothpaste. My toothpaste is Pepsodent. But every bloody toothpaste is named as what? Colgate. That is a brand name. If I'm eating noodles, yellow color. Oh, sir, eating Maggie. No, it is Yippee noodles. Brand name is so powerful that every item, even if manufactured by others, will be known by that brand name. If I am wearing a pair of shoes, and on that shoes a tick mark is there. Oh, Nike shoe. Yes or no? If I'll buy some shoes, okay, no. Every shoes is now known as sport shoes. Oh, Nike. No, not Nike. It is sport shoes. Getting my point? So for example, I want to manufacture mineral water. I am a businessman. I want to manufacture mineral water. But I want to manufacture my mineral water and I want to write a brand name, Bisleri. Can I write that name? Do I have a right to write that name, Bisleri, on my mineral water? Who can use that brand name? The Bisleri company, who is manufacturing that mineral water on the brand name of Bisleri for so many years. That brand name they have registered on their name. Now, whenever they will manufacture the mineral water, they can name their mineral water by this brand name, Bisleri. Any other person manufacturing mineral water cannot keep a name on his mineral water, Bisleri. I will have to find out some other name. But no, I want to sell my water on the name of Bisleri. I want to sell my mineral water on the name of Bisleri. Because with this name only, the mineral water people will buy blindly. If the name is Bisleri. So, what I'll do? I'll go to the Bisleri company. I'll meet the Bisleri owner. I will tell him, sir, I want to buy your name. I'm not interested in your factory, this, that. I have my own factory where I'm manufacturing mineral water. But I want to name my mineral water Bisleri. So I am just coming to buy that brand name from you. Tell me, will that Bisleri owner sell me the name of the mineral water, Bisleri? Yes. But for that, he's going to charge me thousands of crores. Is he selling his brand name for 5,000 crores? And I'm ready to pay that 5,000 crores. Because I know that if I will buy this brand name for 5,000 crores, that 5,000 crores plus super profits I will buy with this just brand name. 5,000 crores I will recover within 2 years by manufacturing water and selling the water on the name of Bisleri. That brand name is going to give me advantage, because with this brand name only the mineral waters will be sold. People will trust this name. I want to sell my sports sneakers. I'm a manufacturer of sports sneakers. Those sports sneakers I want to sell, but I want to put the tick mark which the Nike puts. Can I do that? For that I will have to go to Nike and I will have to buy that tick mark, that is known as trademark. Something is known as brand name and something is known as trademark. Both are different. Trademark is some logo. Trademark is some, and that logo is so famous that people will immediately come to know with that logo only that which company is this, which product is this. Do you know any such logo? Yes. Tick mark on the shoes is what? Nike. Any other? Puma. Then Adidas. 3 lines. Don't tell only about footwear. Other. Huh? Half-eaten apple. This is what? Trademark. This is trademark. So if this mark is there on the product, people will come to know, oh, this is Apple phone. If this mark is there on the shoes, this is Nike shoes. Mark is so powerful. Now tell me, If I want to manufacture my shoes and put that mark on my shoes, will I go to Nike? And I will ask for that trademark logo, that sell me this logo, sell me this trademark, which they would have registered on their name. Okay. How much they will charge? 5,000-10,000 rupees? Or thousands of crores? Thousands of crores they'll sell their trademark. So the assessee is selling the trademark, brand name, goodwill, etc. for 2,000-3,000 rupees. Hundreds of crores, thousands of crores will be charged for these items. And if we will not define the cost in these cases, no, there will be a big problem. And that problem actually happened in one case. So I'll first share the details of that case, only then you will come to know that why the Kulavaridi. Why there was a need to define the cost of these assets. So there is a very famous case, okay. The name of that case is this is a Supreme Court case, which I am discussing with you. Be very careful. Okay. Now see, let's take one example of goodwill. Okay. I am doing some business. Veena stores. Veena stores, you know, na? Very famous. Or I am running a restaurant, CTR. CTR is also very famous. You all know, na? Now for example, I am running a restaurant. The brand name of that restaurant is CTR. Since so many years, I have been doing this business. Now CTR restaurant has a goodwill. How that goodwill is there? So many years, I have cooked the food in my restaurant, and with, wholeheartedly, I have given services to my customers, to my clients, and I have fed them very, delicious food in my restaurant. So people are really happy with the services which are provided in the business. Okay. And because of that, slowly over a period of time, the name, the fame, the goodwill of this business is, building. Now, for example, you want to come in the restaurant business. Can you open a restaurant? And that restaurant is also selling the same items which CTR restaurant is selling. So now your restaurant is here selling the same items which CTR restaurant is selling. Tell me, people will prefer which restaurant? Absolutely. Why? This is a new restaurant, okay, just now opened. Maybe the food is not good. People will take time to have that trust. But that trust, that goodwill is already there with the CTR. So any person who is already knowing this will always prefer CTR. And he knows that they cook really good food. Okay. So he will also tell others that go to CTR, the food is really nice, this and that. Okay, no? So mouth publicity also happens. Because of that, goodwill is getting generated. So what happens now? Over the number of years, this business is done, and in these many years, the goodwill has developed on its own. So this is known as self-generation of goodwill. This is known as self-generation of this goodwill. Whenever you see any of these intangible assets, no, they have the capacity, they have the power to be generated on its own. So these assets generate on their own over a period of time. They will automatically generate. Now see, for example, you want to do that same restaurant business. So instead of opening a new restaurant, why don't you buy CTR? Go and meet the CTR owner and tell him that I want to buy your restaurant business. And that fellow is also old now, and he is not interested in running that business for long. And if you are offering a good deal to him, he is ready to sell his business, entire restaurant business. Yes or no? So now, restaurant business will have assets, will have liabilities, yes or no? All the assets, all the liabilities, the valuation and everything was done. You both came to know that this business has a total value of 50 crores. How much? So you give 50 crores and buy the business. Assets, liabilities of that business, net assets of this business is what? 50 crores. Premises are there, furniture is there, equipments are there, yes or no? Liabilities will be there, so assets will be valued, liabilities will be valued, assets minus liability. What is the net asset value of that business? 50 crores. You go and offer 50 crores to him, to the CTR owner, you tell him that, boss, I have valued your business value is 50 crores. I am signing a check of 50 crores, sell this business to me. Tell me that CTR owner will sell that business for 50 crores or not. You are a CTR business owner. No, assume that you are a CTR business owner. I have valued that how many assets are there in your business, minus how much is the liabilities in your business. So your business value comes to 50 crores. So I am offering 50 crores, sell this business to me. Will you sell? Why not? Because over a number of years, you have created a goodwill. So you will also think, no, that why sir has come to offer me 50 crores for my already running business. If he could start with a new business with this 50 crores, with new equipments and all, yes or no? Why has he come to buy my business only? Because sir is not interested in your assets. Sir is not interested in your liabilities. He is interested in your goodwill. Because if I will start doing the same business, new business, customers might not come to me. But the moment I'll start doing that business on your same name, with your same goodwill, with your goodwill only, with your fame only, with your name only, many people will start coming. Understanding? So will you take only 50 crores from me? Or you will tell me that, sir, 50 crores is only the value of my business. And for so many years, I have run this business. I have created the goodwill of this business. Okay, no? So I need 10 crores for my goodwill also. So if you are ready to pay 60 crores, which includes 50 crores for my business assets, yes or no? And 10 crores for the goodwill, then only sit on the table. Otherwise, leave, sir. Now it makes sense. So I said, okay, no problem. I signed a check of 60 crores. I bought that entire business, which is worth 50 crores, by paying 10 crores extra. Why that 10 crores extra I have paid? Because I am taking your goodwill also. So what entry will I pass in my books? Business account debit, 50 crores. Goodwill account debit, 10 crores. To cash and bank, 60 crores. So now I have taken your business. Understood? This example you understood? Now tell me, have you sold your business? I have purchased your business. That means you have sold your business. I have purchased your goodwill also. Have you sold your goodwill? Are you an assessee? Have you sold your goodwill? Did you buy that goodwill from somewhere? Or it got automatically generated in your business? So automatically generated goodwill, you are selling for how much? Tell me, goodwill is an asset. Is it your capital asset? Yes, because under the exclusions, nowhere it was written that goodwill is not a capital asset. Means goodwill is an asset. Goodwill is a capital asset. And if you are selling your capital asset for how much? 10 crores. So you should be paying tax. You should be calculating the capital gain. And you should be paying tax on that capital gain. So tell me, for how much you are selling your goodwill? 10 crores will be full value of consideration. Minus transfer expense. Whatever transfer expenses are incurred on transferring the goodwill, those transfer expenses you will reduce. We are actually calculating the capital gain for the goodwill which you have transferred me. Yes or no? Was that goodwill a capital asset for you? Yes. Have you transferred that goodwill to me? Yes. So on transfer of a capital asset, will you calculate capital gains? Yes. To calculate that capital gain, you need full value of consideration. So what was the consideration which you are getting for transferring your goodwill? 10 crores. Small amount or a big amount? Big amount. So 10 crores is the full value of consideration for transferring your goodwill minus transfer expense. So at the time of transferring that goodwill, if any transfer expenses were incurred, reduce that also. So you will get net consideration. For example, there was no transfer expense for goodwill. Let us keep it simple. So net consideration will be 10 crores. Will you reduce the cost of goodwill? Will you reduce the cost of goodwill? Yes. So cost of acquisition of the goodwill has to be reduced to calculate the capital gain. You are calculating capital gain. So to calculate the capital gain of goodwill, you have to reduce the cost of acquisition of the goodwill, no? What was the cost of acquisition of your goodwill? Did you buy it from somewhere outside? Or it was self-generated? So how much is the cost? 0. Yes or no? So you wrote 10 crores, full value of consideration, transfer expense, no transfer expense, net consideration 10 crore, and then cost of acquisition. You said goodwill is my self-generated asset which I am transferring. Okay, so goodwill, self-generated asset, you wrote nil, thinking that there was no cost. Okay, but immediately something came in your mind, that why I am reducing nil. Goodwill, even though it was self-generated, I did not acquire from somewhere, I did not have to pay for buying the goodwill, it was self-generated, but that does not mean that this self-generated goodwill is not having any cost. Even to generate this goodwill, some cost might have incurred. Because for these many years, if I am doing business, every year I am spending some or the other amount for my business. Out of that amount, some amount is actually utilized for generating that goodwill also. Year 1, I am spending some amount on my business. Year 2, I have spent some amount in my business. So for these many years, whatever amount I am spending on my business, out of that amount, some amount would have actually been utilized to generate the goodwill also of my business. How much is that amount? Cannot be ascertained. And there is no formula also with which I can derive that amount which I have actually utilized to generate that goodwill. Goodwill generation involves cost. Goodwill generation involves cost. It is not there that the goodwill was generated free of cost. Goodwill generation involves cost. But how much cost was involved to generate that goodwill is not known to me, because I have not specifically generated a proper specific amount to generate that goodwill. I have incurred money on my business, but out of that money, some money definitely would have been utilized to generate this goodwill also. But how much is that money? I don't know. And there is no formula also with which I can calculate that amount, which was incurred as a cost to generate this goodwill. So I am unable to determine that how much was my cost. That does not mean that the cost is nil. So you wrote nil like this, okay, and then you cancel this. Self-generated goodwill transferred, capital gain is calculated. To calculate the capital gain, cost of acquisition, you wrote nil and then you cancelled. Then your assessing officer is asking you, hello, have you calculated the capital gain on your goodwill, self-generated goodwill? Actually, I am sitting to calculate my capital gain, but I am not able to calculate the capital gain. Assessing officer asked, why? What is the problem? Very simple calculation. No, calculation is very difficult. I am stuck at one point. What point you are stuck? Cost of acquisition I cannot determine. Huh? Self-generated goodwill. Cost you are determining. Mad or what? Cost you have to take as nil. You started abusing him. What the bloody hell you are talking? See, I wrote nil and then I cancelled. And then you explain the same thing to assessing officer. That cost is involved, boss, to generate the goodwill also. But that cost cannot be determined, cannot be ascertained, and there is no formula also. There is no fixed method also to calculate that cost. That does not mean that the cost is not involved, cost is nil. Hence, I am not taking the cost as nil. And I am not in a position to determine that cost also, because even I don't know that out of the total cost which I have incurred in my business, how much cost is involved to generate this goodwill. If you know any formula, tell me. AO says, your business you don't know, how would I know? And there is no formula also. Does the law say anything? No. AO is saying, take nil only, no macha. Take nil only. I said, no. Nil means I am ignoring the cost which is involved, which I cannot calculate, does not mean that cost is nil. You cannot force me to take the cost nil if I know that some cost is involved. Now both started fighting. Who? Assessee and assessing officer. Mr. Shetty, BC Srinivasa Shetty, Mr. Shetty and this AO, both started fighting. AO is saying that if self-generated, you cannot determine the cost, take the cost as nil only, no? And assessee is saying, why to take the cost nil even after knowing that some cost is involved? I wrote also and see I cancelled also. So you cannot force me to take the cost as nil. Me knowing that some cost is involved, I cannot take this cost as nil. Both started fighting very heavily. And the case reached to Supreme Court. And Supreme Court gave the judgment in the favor of assessee. What judgment came, you know? That cost of acquisition being one of the most important ingredient to calculate your capital gain. If the cost of acquisition cannot be determined and there is no method with which it can be determined, and the law is also silent about that cost, so in the absence of cost of acquisition which cannot be determined, yes or no? Cost is involved but which cannot be determined, and there is no method also to determine that, and there is no defined cost also in the law, capital gain cannot be calculated. Hence, no tax is required to be paid by the assessee. Entire 10 crore, huge amount of gain on which the assessee was liable to pay tax. Within seconds, the Supreme Court said, cost cannot be determined, capital gain cannot be calculated. And if capital gain cannot be calculated, no question of paying tax on the gains. Assessee, enjoy. This judgment came. Now the moment this judgment came, no, automatically government thought, ayyo, this is only one case where the assessee sold the goodwill for 10 crores and the cost cannot be determined. So on 10 crores we are not able to charge tax. Now this is the Supreme Court judgment. Now everyone all across India, throughout the year, hundreds of crores, thousands of crores, they charge for assets like this, which are self-generated. And if we will tell them to calculate capital gains, they will not calculate capital gains. Immediately they will come and show this judgment to us. See, cost cannot be determined, hence capital gain cannot be calculated. Tata, bye-bye. If some company has sold the Bisleri trademark, Bisleri brand name for 5,000 crores. Just imagine Bisleri company has bought that brand name, or it was self-generated. And if I go and buy that brand name from Bisleri company, how much Bisleri company will charge? 5,000 crores for the self-generated trademark or brand name. Will the Bisleri company calculate capital gain? No. Immediately they will show the judgment of Supreme Court. This is the law now, which says that self-generated asset involves cost. which cannot be determined, and there is no method prescribed to calculate this cost, and the law is also silent about that cost. Hence, in the absence of cost, capital gain cannot be calculated. Entire 5,000 rupees, 5,000 crores, entire 5,000 crores will be out of the net of income tax immediately. So it became very important for them to define the cost of these assets. So they came up with section 55, subsection 2, inserted clause A. Inserted clause A. Now in the clause A, they are saying that if any of these assets, guys, if any of these assets are transferred by you, but it was self-generated by you. If it was, we know that cost is involved. We know that to determine that cost, there is no method which can be used. But we have to charge tax on the capital gain. For that, we have to define the cost. And for the purpose of calculating the capital gain, we are defining the cost as nil. Earlier, when the assessing officer was saying no, at that time, it was not there in the law. Hence, even if the assessing officer said that take the cost as nil, hence it was not taken. Why? Because it was not defined in the law. So we are defining. Since even we also don't know that by applying what method this cost can be determined, because you being a businessman also cannot determine, okay, no, and no specific method will be a workable method to determine that cost. Even if we prescribe some method also to calculate, no, you will come to fight with us. That no, this method is not in my case, my industry is different, in my industry the cost should be determined like this, like that. We don't want those kind of litigations further. So whenever these type of assets are sold as self-generated assets, as to calculate the capital gain, you are going to take cost as nil only. We have already defined now. Now, Bisleri company selling for how much? 5,000 crores. Self-generated trademark, brand name, yes or no? We'll calculate the capital gain and they will have to take a cost as nil. Entire 5,000 crores will now be taxable and the government will get tax revenue on that. Assuming that the gain was long term, 12.5% of 5,000 crores. Calculate. 12.5% of 5,000 crores will be 62 point something. 625 crores, boss. 625 crores rupees of tax the government will get. And if this was not there, no, this entire 625 crores tax the government was not able to collect. And now these transaction in these assets will not be for small amounts. These will be in hundreds of crores, crores of rupees, thousands of crores. Getting my point? So the government will always want that the cost is defined. And if the cost is not defined in this case, BC Srinivasa Shetty judgment will apply and will not be able to charge tax on the huge amount of gains. Understanding or not? Hello? What did you understand? Any of these intangible assets, if self-generated. First asset, goodwill of any business or profession. Second is trademark, brand name of any business or profession, or any other intangible asset, now. Okay, no? Then right to manufacture, then right to carry on any business or profession. Then it is a tenancy right. Then it is a stage carriage permit. Stage carriage permits means it is a permit given to transporter to ply their vehicle on a particular route which has stages. Stages means stops, bus stops. So you can ply your vehicle on this route. For example, from Malleshwaram to airport. A specific route is there. On that route, you are given the permit to drive your vehicles. Okay, no? But people will get into your vehicle and people will get down on a stop. So they will take the vehicle, they will get onto the vehicle on a stop and they can get down also on stop. Bus stops are there, no? So if stops are there on the route, and on this route you are permitted to run your vehicles. So for that, stage carriage permit, this permit is given. This permit is a type of right to ply your vehicle on a particular route where you can run your vehicle in stages. Stages means stops. Understanding? So loomers are also there. What is loomers? Have you heard about power looms? What is power looms? Cloth manufacturing is happening. The clothes are manufactured with cotton, thread. Cotton is converted into thread, then weaving of thread happens and that becomes cloth. So it happens on machines. Those machines are known as looms. So the government gives certain number of hours to run that machine. So permission to run those machines for certain number of hours is given. So during the day you can run your looms for these many hours. During the day you can run your looms for these many hours. Yes or no? So that permit is given. That permit is known as loomers. That is also a right. Okay. So if you have any of these assets, what did I say? If you have any of these assets, any intangible asset, any right. Now, if they are what? If they are self-generated, if you are transferring these assets, but these assets were self-generated by you, will you calculate the capital gain? Yes. So to calculate the capital gain, what cost you are going to take? You are going to take nil. Nil will be the cost which we have defined. Now nothing, we don't want to listen to you. We are not going to listen to anything. Cost for this asset is already defined. We are always going to take nil as a cost. Take the cost as nil, calculate the capital gain and pay the tax on that capital gain. Do you remember, I bought your business. You sold me your business. So you sold your goodwill also. For how much? For you, the goodwill was self-generated. So for you, now the capital gain will be calculated because you are selling your self-generated goodwill. So how much cost you are going to take? Nil. Because you are selling your self-generated goodwill for 10 crores. So cost of acquisition you are going to take as nil. Did I buy that goodwill? Did I buy that goodwill? Now in future, if I sell that goodwill, what will be my cost? Should I also take nil? For me, it will be my actual cost. At what price I bought? That will be my cost of acquisition. So if these assets are self-generated, what will be the cost? Nil. And if the assessee acquired these assets by paying some consideration, and then assessee is selling these assets, then the cost will not be nil. Then it will be actual cost. The cost at which the assets were acquired. Actual cost. Yes or no? So if I sell the same goodwill in future to someone for 15 crores. So to calculate my capital gain, 15 crores will be full value of consideration minus transfer expense. Net consideration will come. What cost I should take? 10 crores, which was my actual cost. Understanding? Now, self-generated or acquired on or after 1st April 2001. If these assets are self-generated or these assets are acquired on or after 1st April 2001, what will be the cost? Nil or actual cost. But what if these assets are acquired or self-generated prior to 1st April 2001? Will you get that option to take the fair market value as on 1st April 2001? Option to take the fair market value as on 1st April 2001 is available for all assets other than 55(2)(a). For these assets, that option is not available. So even if these assets are self-generated or acquired prior to 1st April 2001, you are going to take cost as nil. You are going to take the cost as actual cost only. Yes or no? The option to take the fair market value as on 1st April 2001 given by section 55 subsection 2 clause B is not available for these assets. Sir, if it is available for all the assets, then why not for these assets? Apply some common sense. These assets are not normally bought and sold in the market. These are unique assets, and these assets will never have any market values. Everyone will have different perception about this asset. Everyone will be ready to give a different amount for this asset. Bloody for your business goodwill, I was ready to pay you how much? 10 crore. If someone else was there, he would have been ready to give you 20 crores also. Someone might not give you a single penny also for your goodwill. So your goodwill does not have any market value. Understanding? Everyone has a different perception about these assets, and everyone has a different perception, means different value which they can associate with these assets. Yes or no? If I am going and buying the brand name from Bisleri, I am ready to offer 5,000 crores. Somebody will be ready to offer 7,000 crores. Somebody will be ready to offer 4,000 crores. Somebody will be ready to offer 100 crores only. Somebody will not be ready to pay a single penny for that. So there is no market value which exists for these assets. Bloody if the market value itself does not exist, then how do we give you that option to take the market value? Understanding? So if these assets are self-generated or acquired prior to 1st April 2001, what will be the cost? Nil or actual cost. That's it. Fair market value option is not available because their fair market value does not exist only. What if they are acquired or self-generated on or after 1st April 2001? Then also you are going to take nil as well as actual cost. Will you remember? All assets you are supposed to take actual cost. All assets you are supposed to take actual cost, and you get that option also to take the fair market value. But for these assets you are supposed to take this or this as a cost of acquisition. 55 subsection 2 clause A. 55 subsection 2 clause A. If the above assets were self-generated or acquired prior to 1st April 2001, option to take the fair market value as on 1st April 2001 as cost of acquisition does not exist. So therefore their cost of acquisition shall either be nil or actual cost, which we are already taking. Yes or no? Next one. Even if they are self-generated or acquired prior to 1st April 2001. Now tell me, these assets, you are transferring right now. Hello? Full value of consideration minus transfer expense, net consideration. Now you know the cost. Reduce this cost. Gain will be there. Short term or long term. Nature of the gain depends on type of asset, and type of asset depends on period of holding. What will be the period of holding of these assets? 12 months, no? 12 slabs you will get. 12 months. 4 assets. Listed security. Is it listed securities? Units of equity oriented mutual fund. This is units of equity oriented mutual fund. Then third asset, units of UTI. Is it units of UTI? Zero coupon bond. Is it zero coupon bond? Then how come 12 months? Check 24 months. How many months? So if their holding period is 24 or less, short term, more than 24, if they are transferred on or after 23rd July 2024, and if they were transferred prior to 23rd July 24, no, that time their period of holding used to be checked as 36 months. But don't worry, their transfer date will be given in your question, and that transfer date will be 25-26. Because you are transferring these assets in your previous year. What is your previous year? 25-26, meaning on or after 23rd July 2024. For all the assets, other than those 4 assets, period of holding you are going to check 24 months. Period of holding will start from date of acquisition, and it will end on date immediately preceding to date of transfer. Hello? Only if they are acquired. What if they are self-generated? The period of holding will start from the date on which you have started your business. Hello? The date when you started your business. From that date only you have started generating your goodwill, no? From that day only, you have started using the trademark or your brand name, etc. only, no? So in the case of self-generated assets, start from the date of starting the business. From that day only, you are holding it till the date immediately preceding to date of transfer. And if they were acquired, then date on which they are acquired. From that day, the period of holding will start till the date immediately preceding to date of transfer. And this period of holding from this date to this date, this period of holding 24 months or less. Short term. More than 24 months. Long term. The gain will be short term or long term depending on the type of asset, and type of asset will depend on period of holding. So tell me, period of holding to be checked for above assets shall be 24 months. If their period of holding is less than equal to 24 months, they will be short-term capital asset and the resulting gain will be short-term gain. And any short-term gain, if you see now, till the time, I am not saying that it is covered by 111A. Two types of short-term gain will be there. Short-term gain which is normal and short-term gain which is covered by 111A. Yes or no? Any short-term gain which is covered by 111A, that is taxable at what rate? 20%. But till the time I am not telling you that the short-term gain is covered by, this short-term gain is covered by 111A, till that time every short-term gain taxable at normal rates. So there are two types of short-term gains. Short-term gains which will be covered by 111A will be taxable at a separate rate, 20%. Yes or no? But if the short-term gain is not covered by 111A, that means every short-term gain is your normal income will be taxable at normal rates. Long-term gain will be of two types. Long-term gain will be of long-term gain 112, long-term gain 112A. Long-term gain 112, long-term gain 112A. STT paid long-term gains. What did I say? STT paid long-term gains will go to 112A. Every other long-term gain will come to 112. So first of all, tell me, what did I say? STT paid long-term capital gain will go to 112A. All other long-term capital gain will go to 112. And sir, STT paid short-term gain will go to 111A. All other short-term capital gain will be normal incomes. This will be taxable at what rate? 12.5%. This will be taxable at what rate? 20%. This will be up to 1,20,000, up to 1.25 lakhs, no tax, and excess amount taxable at what rate? 12.5%. And normal will be taxable at normal rates or 115 BSE rates as the case may be. So every time when you will calculate your capital gains, no, till the time it is not STT paid, till the time it is not, you are not going to bring under 112A or 111A. All the short-term gain will be normal. Taxable at what rate? Normal rate. And all the long-term gain will be covered at under section 112. Taxable at what rate? 12.5%. Understanding? So long-term gain on transfer of jewelry. 112 or 112A? 112. Because on transfer of jewelry, I don't pay STT, etc. I don't transfer the jewelry on recognized stock exchange. Long-term gain on transfer of immobile property. 112. Long-term gain on transfer of unlisted shares. 112. Long-term gain on transfer of paintings. 112. Any asset, long-term gain will go to 112. Now what if short-term gain on transfer of immobile property? Do you pay STT on that? No. Normal. Short-term gain on transfer of jewelry? Normal. Short-term gain on transfer of paintings, etc. Normal. Every short-term gain is normal. Every long-term gain is 112. But if STT paid long-term gains are there, STT paid short-term gains are there, they will be covered by 112A or 111A. Yes or no? So till the time, I am not telling you that the gain is 112 again or 111 again. Every long term gain will go to 112. Every short term gain will be normal. Yes or no? So now tell me, we were discussing about which assets? Intangible assets. So when you buy and sell the intangible assets, do you pay STT? Do you pay STT? Do you transfer them through recognized stock exchanges? So are they STT paid or others? If long term gain, then come to 112. Taxable at what rate? 12.5. And if they are short term, then normal, taxable at normal rates. Understanding? But period of holding you will check. 12 months, no? 12 months, no? Then 24 months. 24 or less short term. Resulting gain will be short term gain. Taxable at what rates? Normal rates. Yes or no? And more than 24 months, then long term asset, long term gain will arise, will be taxable under section 112. At what rate? 12.5. But if the period of holding has to be checked, period of holding has to start from date of acquisition. It has to end on date immediately preceding to date of transfer if they were acquired. And if they were self-generated, then the period of holding will start from date on which the business was started. From that date only you have started generating it. From that date only you have started holding it till the date immediately preceding to date of transfer. That period of holding, 24 months or less, more than 24 months, will decide that asset was short term or long term. Understood? What will be the cost? Did you understand? What will be the period of holding? Did you understand? Hello, sir. Okay. So now please pay attention. In case where the above assets are acquired from previous owner by way of modes specified under section 49(1), cost of acquisition to the previous owner shall be taken as cost of acquisition in the hands of assessee. Cost of acquisition to the previous owner shall be nil if it was self-generated. Cost of acquisition to the previous owner shall be actual cost if he acquired. And under section 49(1) shall be taken as cost of acquisition to the assessee. Now what is this? What is this? So for this, I'll take you to section 49(1). Which section? I'm just giving you an idea, basic idea. Just remember only whatever I am telling you right now. Okay, no? This thing will be done in details in 49(1) and all later on parts. Okay. But first of all, tell me, are you an assessee? Are you an assessee? Okay. You are an assessee. Assessee. Did you self-generate? Did you self-generate? Yes. Or did you acquire? So if you self-generate, then what will be your cost? Nil. If you acquired, then what will be your cost? It will be actual cost. It will be actual cost. So if it is done by assessee, then there is no problem. But wait. Now you are an assessee. You are an assessee. Okay, no? Do you have any intangible asset? Okay. Was it self-generated by you? No. You did not self-generate. Oh, so you acquired. No, you did not purchase also. So where did this asset come to you? Where did this asset came to you? How did you get this asset? If you did not self-generate or you did not acquire, then how the bloody hell you are having this asset? Sir, I got this asset as a gift from someone. I got this asset as a gift from someone. Can you get it as a gift from someone? Can you get it under a will? So, you are getting that asset from someone as what? Gift, will, inheritance, etc. Means these are the modes of acquisition. What did I say? These are the modes of acquisition as specified under section 49(1). Where what will happen? Assessee is having that asset acquired from someone else. Meaning there was some other owner prior to this owner. So you are the owner right now. But prior to this, someone else was the owner of the asset. Who was that someone else? Previous owner. Who was that someone else? Previous owner. So can I say assessee has acquired the asset from any other person? Yes or no? And he was the previous owner. He was the previous owner. Now, if this previous owner has self-generated or he has acquired the asset, after self-generating, after acquiring, he is giving you that asset in the form of gift, will, inheritance, etc. Yes or no? So whenever any assessee has acquired the asset by way of such modes which are given under section 49.1. 49.1 is having a list of certain modes, like gift is there, will is there, inheritance is there, revocable transfer, irrevocable transfer. Yes or no? There are many modes which are given in section number 49.1. These are known as modes specified under section 49.1. Modes which are specified under section 49. Assessee, did you acquire your asset? Assessee, did you acquire your asset by way of any of these modes? Assessee, did you acquire your assets by way of any of these modes? Yes, I got this asset by way of gift. Somebody gifted me this asset. Yes or no? Oh, you acquired this asset through a will. That is also mode specified under section 49. Oh, you acquired this asset by way of inheritance. Oh, that is also a mode specified under section 49. Oh, revocable transfer, irrevocable transfer. So there are certain modes. And any of those modes, through any of those modes, the assessee has acquired. Meaning he himself has not self-generated. He himself has not acquired. He has acquired through modes which are specified under section 49.1. Now what 49.1 says, that if assessee has acquired any capital asset by way of the modes which are specified under section 49.1, the cost of acquisition of that asset to the assessee will be nothing but cost to the previous owner. Cost to the... So if previous owner was there, what is the cost in the hands of previous owner shall be deemed to be the cost in the hands of the assessee. So now you will have to first determine the cost of previous owner. Now you will have to first determine the cost of the... And the cost of that previous owner which you will determine as per 49.1 will become your cost of acquisition. Understanding? Hello? So, if the previous owner self-generated and then gifted you, so what is the cost of previous owner? Nil. In the hands of previous owner, you will apply 55(2)(a). Because now he has self-generated. Yes or no? So what will be his cost? As per 49.1, that will be deemed to be your cost. Your cost will also be nil. Understanding? Hello? Now tell me, if the previous owner purchased, if the previous owner acquired means purchased, so what was his actual cost? As per 55(2)(a), his actual cost will be his cost of acquisition. So his actual cost was his cost of acquisition. Cost of acquisition to the previous owner was actual cost. As per 49.1, that will be deemed to be your cost. So always the cost to previous owner will be taken as cost in the hands of assessee if the assessee has acquired the asset by way of modes specified under section 49.1. And what is the logic for that, and how that is done, why it is done, yes or no? Everything I will tell you. But right now just remember this thing. Have you self-generated? Then take nil. Have you acquired? Then take your actual cost. But have you self-generated? No. Have you acquired? No. Then how this asset came to you? Oh, this asset came to you through modes specified under section 49.1 from previous owner. No problem. As per 49.1, cost to previous owner will be deemed to be your cost. And what is the cost to previous owner? It will be nil. If it was self-generated by him, it will be actual cost. If it was acquired by him. So nil will be his cost, actual cost will be his cost, depending that whether he had self-generated or he had acquired, will be deemed to be your cost as per 49(1). Now your cost will not come as per 55(2)(a, his cost will come as per 55(2)(a, and as per 49(1) that will be deemed to be your cost of acquisition. So right now you are selling a goodwill. Are you selling a goodwill SSE? Did you self-generate? Did you acquire? This goodwill came to you by way of gift. Oh. So will you calculate the capital gain of that goodwill? Yes. So to calculate the capital gain of that goodwill, you sold the goodwill for 20 crores. How much? Full value of consideration? 20 crores minus transfer expense? Nil. Net consideration will be 20 crores. What will be your cost of acquisition SSE? You have acquired through mode specified under section 49(1). So what will be your cost? Cost to previous owner. Now we will have to see that who was the previous owner. Did he self-generate? Did he acquire this goodwill? You came to know that your previous owner acquired that goodwill for 2 crores. So what was his cost? 2 crores. As per 55(2)(a, his cost will be 2 crores. And as per 49(1), that 2 crores will be deemed to be your cost. So while calculating your capital gain, how much cost you will reduce? 2 crores. That was the cost to your previous owner, deemed to be your cost. Understood? Everyone? So this is in case where the above asset. Now read properly. Now the same thing I am reading. If the above assets were acquired by the assessee from by way of modes which are specified under section. What are the modes? Gift, will, inheritance. Oh, through these modes you acquired. Then cost of acquisition to the shall be taken as cost of acquisition in the hands of assessee. What is the cost of acquisition of the previous owner? It will be nil if he self-generated. It will be actual cost if he acquired. So nil or actual cost, which was the cost of the previous owner, under section 49(1) shall be taken as cost of acquisition of the assessee. That's it. Understood? Next one. Now, if goodwill of business or profession was acquired, do you remember such kind of thing? I've already told you under PGBP. Read this, you will come to know. I know that you will not remember anything like this, but still, I'm trying my luck. Do you remember specified assets of which you are the owner and used for the purpose of your business or profession? For those assets only you can claim depreciation. So under the head PGBP, only certain assets are specified whose cost you can claim under the head PGBP. Which are the specified assets? Tangible asset, intangible asset. Tangible asset la land, not a specified asset. Pro will come to capital gain. Building, furniture, plant and machinery will be specified asset. The cost of these assets will be allowed under the head PGBP only. Because the assets are used for business or profession, their cost will be allowed under the head PGBP in the form of depreciation. Even if the land is used for the purpose of business or profession, that land, cost of that land will not be allowed under the head. Throw the land outside. Outside means under the capital gain head. So land will come to capital gain. And the cost of that land will come to capital gain. Yes or no? So whenever this land will be transferred in the future, the capital gain calculated, to calculate that capital gain, cost of the land will be reduced here to calculate the capital gain. Yes or no? Because that cost was not allowed under the head PGBP in the form of depreciation, because it is not a depreciable asset. With effect from 1st April 2020, even the goodwill is not a depreciable asset. Goodwill which you will buy right now, and even the goodwill which you bought earlier will no more be a depreciable asset. So whatever cost of this goodwill which we have allowed so far in the form of depreciation, if the goodwill was purchased prior to 1st April 20. So if the goodwill was purchased prior to 1st April 20, some cost of that goodwill you would have already taken as a deduction in the form of depreciation for these many years. Reduce. Till 31st March 20, whatever cost of that goodwill which we allowed in the form of depreciation, reduce that. You will get the WDV of that goodwill, remaining cost of that goodwill as on 31st March 2020. This goodwill and the remaining cost throw in the capital gains. If the goodwill was acquired for the purpose of your business or profession, if it was acquired prior to 1st April 2001, will you take the entire actual cost? No. We'll take the WDV as on 31st March 2020. For example, in the year 1819, I am not talking about self-generated goodwill, boys and girls. I'm talking about that goodwill which you acquired. Now, whenever you will calculate the capital gain of the goodwill which you acquired, usually you take actual cost only, no? So actual cost you take for that goodwill which you have acquired on or after 1st April 20. Because the goodwill which you have acquired prior to 1st April 20, if you are taking the entire actual cost of that goodwill as a cost here, what will happen? The cost which was already allowed under the head PGBP in the form of depreciation will again be considered as a cost. So you acquired your goodwill in the year 1890. When did you acquire? That time the goodwill was eligible for depreciation. So how much was the cost of your goodwill? Tell me. In the year 1819, you acquired goodwill for 20 lakhs. Not 20 lakhs, let's take 100 lakhs. So the cost of your goodwill in 1819 was 100 lakhs. Guys and girls, this goodwill you acquired for the purpose of your business or profession. At that time, no, the goodwill was a specified asset. And at that time, you used to get the depreciation also on that goodwill. So don't you think in the year 1819, if the goodwill was an eligible asset, on that you used to get depreciation. Out of this 100, some cost would have already been allowed under PGBP in the form of depreciation? Understanding or not? So out of this 100, how much cost was allowed in 1819 in the form of depreciation? 25%, because intangibles are depreciable at what rate? 25%. So on this, you would have taken 25% depreciation. So first year, how much depreciation? 25 lakhs in the year 1819. So how much is the WDV? 75 lakhs. And out of that, for 1920 also, some depreciation was allowed, no? On WDV basis. So 75 lakh into 25%. How much? 18 point. Reduce that. 56 point. Can I say this is the WDV as on 31st March 2020? Now with effect from 1st April 2020, no goodwill will be eligible for depreciation under PGB period. Not the new one whose actual cost you have just now incurred on or after 1st April 20, and not even that goodwill which you had already acquired. Even that goodwill will also not be eligible for depreciation under PGBP. Throw this goodwill out under the head capital gain. So if this goodwill will come to capital gain, what will be the actual cost of this goodwill? Whenever you will calculate the capital gain of this goodwill, if this goodwill you transfer in the future, for example, 150 lakhs. How much? So you will calculate the capital gains. 150 lakhs will be the full value of consideration minus transfer expense, net consideration. What cost of acquisition you will take? Sir, actual cost, one tight slab. Bloody, if you will take actual cost, meaning you will reduce 100, that means the depreciation which you have already claimed, the cost which you have already claimed under the head PGBP in the form of depreciation, again you will claim that cost in the form of cost of acquisition. No. The cost which we have already allowed in the form of depreciation will not be treated as actual cost. Only will not be treated as cost of acquisition. Only the remaining cost, meaning the WDV as on 31st March 20, whatever cost remaining out of this 100 will be later on allowed as a deduction while calculating the capital gains. So this type of goodwill, if it was acquired, don't take the actual cost. We'll take the WDV. We'll take the as on 31st March 20, because till that time some cost is already allowed under PGBP that should not be treated as a part of your cost of acquisition later on. So your cost of acquisition of this goodwill, whenever you will transfer this goodwill, will be WDV as on 31st March 20. What if the goodwill is acquired on or after 1st April 20? Then the entire actual cost which we did not allow under PGBP, you can take it as a cost of acquisition. Understood? This discussion was only about goodwill and only if the goodwill is acquired. This discussion was not for self-generated goodwill. Understood? Okay. Pay attention. In the case of GW, GW means of BP. BP means acquired, meaning you purchased. When did you purchase? Prior to 1st April 20. So what will be the cost of acquisition of this goodwill for the purpose of capital gain? WDV as on 31st March 20. And if this goodwill you acquired on or after 1st April 20, what will be the cost of acquisition? Actual cost, which we have already told you. Take that actual cost, because none of the actual cost, not a single part of that actual cost was allowed under PGBP. Take the entire actual cost under the head capital gain as your cost of acquisition. If I am your examiner, no, trust me on this, I would definitely exploit these points in your exams. But unfortunately, no, the examiners don't exploit these points in your exams. So that does not mean that these kind of things can never come in the exam. If it comes, no, it will give you cash marks, so easy things. But you have to just visualize. Oh, so this was taken in 1819, 100 lakhs. In 1819, the goodwill was allowed. Sir had explained in the class, goodwill was allowed under PGBP head. So out of this cost, some cost would have been already claimed under PGBP head till 31st March 20. That much cost should not be coming as a cost under capital gain. This imagination should go. Oh, any goodwill, this goodwill was purchased in 23-24. Goodwill was purchased in, meaning on or after 1st April 20. This entire cost, not a single amount of this would have been allowed under PGB. The entire cost I will take as cost of acquisition. Done? Now, see, how many assets I wrote here? Okay, 9 assets, no? Read the name one by one and point wise, huh? Point number 1, point number 2, point number 3, 4, 5, 6, 7, 8, 9. Okay, no? First is what? Goodwill. Goodwill of any business or profession. Second one is trademark or brand name of any business or profession. Third one is any other intangible asset. Huh? Any other intangible asset. Then right to manufacture, produce or process any article or thing. Then it is right to carry on any business or two rights are there. Right to manufacture, right to carry on any business or profession. Then it is tenancy right, stage carriage permit, loom arts, any other assets. 9 assets. Read it once more. Read it once more. Goodwill, trademark brand name, any other intangible asset, right to manufacture, right to carry on, stage carriage permits, tenancy rights, loom arts or any other right. Yes or no? Now let's come to this point. What is this? Goodwill or any other? Don't you think something is missing? Second point is missing. Trademark or brand name. Trademark or brand name deliberately not written. So goodwill or any other intangible asset. Then right to manufacture, right to carry on. Then sir, directly any other right. Ayo, loom arts not covered, tenancy right not covered, stage carriage permit not covered. Meaning, can I say I'm talking only about asset number 1, asset number 3, asset number 4, 5 and 9. Okay, no? Hashtag for these assets. What did I say? If they are self-generated or they are acquired, their cost of improvement will also be taken as nil. Cost of acquisition nil or actual cost if they are acquired. Cost of acquisition is actual cost. Self-generated then nil, cost of acquisition. But what will be their cost of improvement? Nil, 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 nil. Whether they are self-generated or they are acquired. Their cost of acquisition, cost of improvement should also be taken as nil. That is defined under section 55 subsection 1, which is the definition of cost of improvement. So the cost of improvement defined under section 55 1 says that 55(1) says that for these assets, cost of improvement should also be taken as nil. Whether they are self-generated or they are acquired will not make any difference. But sir, cost of improvement will be taken as nil for other assets also. It is not written there. So in section 55 subsection 1, name of only these assets are given. 55(1) does not talk anything about the remaining assets. Color, blue color. Star. 1, 2, 3, 4. Their cost of improvement will also be taken as nil. It is not given in 55(1). Meaning that if any actual cost of improvement is incurred on those assets, you can take the actual cost of improvement also, whether they are self-generated or they are acquired. Understanding or not understanding? Understanding, okay. What you understand, I will see now. Number 1, which asset? Tell me. Goodwill. Goodwill of any business or profession. Okay. Number 2, trademark or brand name. Okay, of any business or profession. Number 3, any other IA, intangible asset. Number 4, right to MFR. MFR means manufacture. Number 5, right to carry on any business or profession. 6th one, tenancy right. 7th one, stage carriage permit. 8th one, LUMARS. And the 9th one is any other right. Now see, you will tell me their cost of acquisition. Their cost of acquisition, if they are self-generated or they are acquired. Come on, tell me. You are going to tell me about their cost of acquisition first. What will be the cost of acquisition? Nil, 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 nil. Cost of acquisition will be taken as nil if they are self-generated. What about if they are acquired then? Actual cost. But wait. This is what? Goodwill. Their actual cost will be taken as cost of acquisition only if they are acquired on or after 1st April 20. Otherwise WDV as on 1st April 2020 or 31st March 20. Yes or no? Be careful in that, huh? Next one. AC. Yes or no? This is the cost of acquisition. Now, what will be their cost of improvement? Whenever you will calculate their capital gain, so you will have to reduce their cost of improvement also. No. So whether they are self-generated or they are acquired, what will be their cost of improvement? So as per section 55(1), 1, 2, 3, 4 and 5. Okay. Cost of acquisition will also be taken as nil. Cost of acquisition will also be taken as nil. Cost of acquisition will also be taken as, improvement will also be taken as nil. Cost of improvement will also be taken as nil, whether they are self-generated or acquired. But it is not mentioned about any other asset. So if for other assets the cost of improvement is incurred on what basis? Actual basis. So you reduce actual cost of improvements, whether they are self-generated or acquired, will not make any difference. So for other assets, ACOI, actual cost of improvement, then ACOI, actual cost of improvement, ACOI and ACOI. Actual cost of improvement, if incurred, you can reduce. But remember, for the first 5 assets which I have told you, cost of improvement irrespective of anything, you have to take that also nil. Will you remember this? This is a SUMMARY, TABEL, summary table. This I have already given here. For your kind reference, I have given this summary table over there. Okay now? So what I have done? I have highlighted the points. Circle, 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 5 assets. Yes or no? And then star, star, star. In the case of star, actual cost of improvement. In the case of circle, cost of improvement also taken as nil, whether self-generated or acquired. Will you remember? So the definition of first asset, intangible asset, done. 55 to A. Now if they ask you any question in the exam, and in that question if they are asking you about calculating the capital gains of intangible assets, and if you forget today's discussion which I have just now done, 100% you will not be in a position to give the correct answer of that question, because in that question 100% whatever I have spoken in front of you right now will be exploited in the question. They would like to see, they would love to see that how you have studied 55 to A before coming to the exam. Majority of the students know, put all these things in the option. That is what institute knows very well. Because most of the classes, most of the professors, most of the teachers, they don't teach all these things. So if out of 100% students are there, no, all over India, only handful of students know about all these things. And if the students, majority of the students don't know these things, they are not involved into these things, definitely they are not going to pay importance to these things while revising. And institute knows each and everything thoroughly, that how the students will prepare and what things they will study and what things they will, try to write in the exam. Definitely if they want to make your life miserable in the exams, no, they want to make the question paper difficult for you, though the paper will never be difficult, but it will be difficult for you, 100% they are going to exploit these concepts in the exam. If a question is drafted, no, it will blow your mind. Write down one question I am giving you. Write down one question. And you are going to solve that question at home today. Done, no, sir? Mr. Mehta. Mr. Mehta. Has sold his trademark of his business or profession. Mr. Mehta has sold trademark of his business. Trademark of his business. Which he started in 1980. 80. So Mr. Mehta, what? Sold his trademark of his business, which he started in, for a consideration of rupees 1.5 crores. 1.5 crores to Mr. Golu. Whatever name you want. Gopal. Write down Gopal. To Mr. Gopal. On 19th of December 2025. On 19th of December 2025. 25. Expenses incurred on transferring the trademark. Expenses incurred on transferring the trademark on the name of Mr. Gopal were 2 lakh rupees, shared equally by Mr. Mehta and Mr. Gopal. On 9th March 2026, Gopal transferred this trademark for a consideration of rupees 1.8 crores to Mr. Tanmay. Whatever name you want, you can write. Mr. Tanmay. T-A-N-M-A-Y. Tanmay. Mr. Tanmay. Expenses incurred on transfer rupees 2,50,000. Incurred fully by Tanmay. Compute the capital gains and also determine the nature of capital gains in the hands of full stop. Also determine the nature of capital gains. Yes. Solve this question at home today. And if you get this type of question in the exam, will you say thank you to me? Sure. But before that, you should solve this question correctly. How will you solve? First of all, did I tell you to go home? Then why are you packing your bags? You want to sit till 6 o'clock? Don't angry me, huh? I was about to leave you only. And if I'll see you packing your bags and everything, I will make you all sit till 6 o'clock. You want to sit for 6 o'clock? So, in this question which I have just now dictated, what is the required part? Calculation of what? And also you are supposed to tell the nature of the gain. Now you will calculate the capital gain for whom? For both. Both means who? Gopal. You will calculate capital gains for Gopal. Or you will calculate the capital gains for Tanmay. 10 slaps I will give. Who is transferring the asset? Mehta. So will you calculate the capital gain for Mehta? And also for Gopal. They have not told you calculate the capital gain in the hands of one person. And one person is not transferring. 2 persons in the question are transferring. Since I am not aware that what my examiner wants to see, now it is a tension. I see Mehta is also transferring, Gopal is also transferring. Examiner is saying compute capital gains. Capital gain of Gopal, capital gain of Mehta, which means that he wants me to calculate the capital gain for both of them. And also determine the nature of the gain, short term or long term. based on period of holding. Tanmay is a transferee. Huh? Tanmay is not the person who is transferring this asset. So when Mehta is a transferor, who is a transferee? Gopal. And when Gopal is a transferor, who is a transferee? Tanmay. Getting my point? So, keeping these things in mind, you are supposed to calculate capital gain. When Gopal will transfer, how much consideration he will receive? 1.8 crores. And when Mehta will transfer, how much consideration he will take? 1.5 crores. Okay. Transfer expenses given. You will reduce. You will get net consideration. Both the cost, you know. You will reduce the cost. And then you will get the capital gains. And you are supposed to write down properly that which type of gain is this. And why are you calling this gain? Short term or long term. Proper presentation should be done. Okay. So tomorrow we will meet and we will continue from here. Tomorrow major chunk of the chapter will finish. Okay. So right now the main basic part which I was supposed to tell you, no, it is about to end now. Okay, no. So tomorrow in the first half we'll end the basic. 1-2 more questions we are going to solve and then we'll move on to the second part of the chapter. Okay, no. See you all tomorrow. Bye.